Hey everyone, this is Crypto Gordon Freeman, and you're listening to the Club 21M podcast. So I'm happy to say this is the 8th episode of the Club 21M podcast. So on the last episode, I discussed regulation and talked a little bit about the infrastructure bill that is now kind of the famous infrastructure bill. We're looking still in August 11th, 2021. So for perspective there, the roads and bridges suddenly becomes about cryptocurrency and how many people in politics have no clue what it is, what it does, how it works. But by golly, by gosh, we can tax the punk out of it. So let's find more angles to grab that. But even more so in episode 7, I talked about things leading up to that I thought were actually bigger picture to crypto, a little bit more significant. The FSOC with Senator Warren and gang, and the 3 people who testified there. 2 out of 3 ain't bad. The one that I absolutely adamantly disagree with, that is very present in social media, trying to remind us every few hours how important it is to strangle the freedom of creativity in software creation, and how much more we need regulation, although not really sure what kind that would entail. But let's make sure and get as much of it as possible from as many people that don't understand crypto as possible. That'll be fantastic. So that's kind of the angle that I took from episode 7. And I think that I was very fair in my assertions about things. And the truth of the matter is, the person that I take issue with in that episode, I agree with their research. I think that they did a good job researching things, but the conclusions that they come to and the way in which they presented it, I feel was either grossly uninformed or dishonest. So one of those two things doesn't lead to an agreement in the end result of things. So that was my angle on that stuff. So on episode 8, we're continuing a talk on regulation, but I'm going to take a different angle and just talk generally about the use of government agencies and their role of regulation. And I'm even going to hone in more specifically to look at the SEC and use it as an example between the SEC and Ethereum. And I'm going to look at specifics dealing with who is the head of the SEC right now, Gary Gensler, things that he has mentioned in his coursework when teaching as a professor at MIT, and looking at the case with Ripple. And, I'm doing this just as a one-sided conversation with you guys, which, by the way, like, subscribe, ring the bell, comment, share with others. So we're talking more about regulation. In this case, the weaponization of regulators, the weaponization of politics. And I'll even get more specific to say that this is really in the crypto politico category of things that I like to categorize things. But also, it is very much crypto philosophical, crypto philosophy, things that involve the thinking behind things, bigger picture, the meaning of, the science of, the belief system of, the ideologies that govern. So let's make some broad sweeping statements that people can agree or disagree with. And then once Gordon is the most famous talking head in crypto, I'll have all these wonderful discussions with everybody in the universe about how right or wrong I am about these things. And that'll be super fantastic. That'll be great. Fun stuff. Broad sweeping statements. Let's say that your average diehard crypto person who likes to acquire cryptocurrency, who likes to dollar cost average, who likes to find ways to earn in crypto or trade in crypto or just invest and hold on for dear life, all the things that make a true crypto person crypto. And to all of you maxis, Bitcoin maxis, I do, for the sake of the fact that there are millions of people who don't just look at Bitcoin, I am leaning very hard towards Bitcoin without being a true blue maximalist, in the sense that I am not delusional. And I mean that in the best sense of the word, to say that there is actually an industry of cryptocurrency. You can debate as a Bitcoin maximalist whether any of those matter, whether they're just bad for crypto, bad for Bitcoin, and Bitcoin is king, et cetera, et cetera. I understand all the angles and the arguments. I think that you have every right and sometimes really good intellectual arguments to be made for that side of things. But the fact of the matter is that there are billions of dollars of industry taking place around this cryptocurrency thing, and Bitcoin has paved the way for all of this. And those things, in my opinion, are not Bitcoin killers, but government could be. And people far underestimate the power of the dangers of the things that are happening. So folks out there, more people who are in much bigger, more prominent positions than myself need to be doing exactly what I'm doing here, which is having these discussions, putting into the cryptosphere the intellectual value of having these conversations about the dangers of these heavy-handed regulations from people who do not understand the space. And worse, understand the space, but have a tyrannical, dictatorial idea about what their position in regulation is. And I am disgusted at the U.S. government and their approach to things, but it is not uncommon in a lot of other countries already. We only have to look at the way that health issues are being handled, that it's difficult not to look at things like one huge social experiment, whether it deals with politics or education or health. Freedoms are being custom tailored to the desires of those in control. All the more good reason that we should care about the potential for alternate forms of currency. So let's not even worry about whether we're actually talking about currency like peer-to-peer cash, like where Bitcoin began. You know, the first thing it needed to break through was, could you do PayPal without PayPal? Could you do this without an intermediary? Could you use credit cards without somebody approving or disapproving from that company? You now have a completely decentralized network handling these aspects of things. And Bitcoin told us yes. And Bitcoin said, in fact, 10 years, yes. 11 years, yes. 12 years, yes. So that's a big yes. Really and truly, the only reason that the world stage of politics is now discussing all this stuff, well, there's two reasons. One of them, CBDC, the central bank digital currencies, which last year, if you had these conversations with people, they would say it's impenetrable, it's indestructible. You can never destroy cryptocurrency. Governments be darned, nothing could ever happen, blah, 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 blah. China starts the pilot program on the digital yuan, pushed up in time because of Facebook's Libra that's now something else. They see that as a shot across the bow. So a lot has changed. Suddenly people are very aware of the digital dollar, but they don't really understand the impact and pressure against crypto that it creates. Because a huge part of crypto, you could almost say 30 to 40% is Bitcoin and 20 to 30% is stablecoins. And then everything else is Ethereum and a little bit of Litecoin thrown in. Because all of your ERC20s and others are basically essentially ERC20s that sometimes then shift to their own mainnet. So, but crypto regulation is happening because of the impact of stable coins and the fact that they work better than old world money. Pegging something to a standard inside of crypto when things can exchange in the milliseconds back and forth tens of thousands of times an hour. And we're still at 1 or 2% growth of the industry. This is going to end up being a $10 trillion cryptocurrency industry that generates $100 trillion of value capitalization in one form or another. When you pile on things coming from the old world of money into a new sector that is extremely efficient, the old world gets scared that you're going to outperform and make them irrelevant. The people that make horrible decisions about what they think regulators should do not understand the future impact of their well-researched but poor conclusions that they come to. Unless they do, which is very likely if it is a socialist progressive mentality. Sorry, but I'm not going to mince words. I'm telling the truth. So I look at the weaponization of power in the form of government. And we're talking politics and philosophy intermingled. So I'm not going to make this one of those long 3-hour things that brings in the history of the universe. I'm going to hone in on a specific example so that you can see what I'm talking about. Ethereum, which is going through a process of staking to take it from proof of work to proof of stake. And who knows how this is going to go. There's pluses and minuses abound. When Ethereum was first launched, they did do a fundraising round. And this was really one of the first big things to take place after Bitcoin. So we're talking years and years and years ago. This stuff was still so geek culture, early mining, not a whole bunch of people able to mine independently, mining becoming big in China, not really an industrial level, just, big money startup in the tens of thousands, hundreds of thousands. Before we got into the real huge concerns about energy use and stuff. And, once the first halvening had happened and we got a little further into it, then people started talking about some of those concerns. What is it going to be like when it gets tougher and tougher, et cetera, et cetera. And Bitcoin has just performed beautifully to allow now, 2 halvenings to occur? I'm just guessing 2, maybe 3. Let's say 3. Yeah, I think it's 3. There have been some happenings. Proof that I'm not looking at any notes on this stuff. So Ethereum, technically, if they raised any money as an early funding round in the United States, then technically they could be in a category that the SEC, the Securities and Exchange Commission, they could target Ethereum and say, you never registered as a security. And a lot of that is built around the Howey test and all this other stuff and, old cases that have progressed since Howey. But essentially, did somebody invest in something with an expectation that somebody else was going to do things that were supposed to generate value and essentially profit? And it doesn't necessarily mean you're guaranteeing profit, but that you're allowing somebody to buy in early to something that they believe will have a future value. And obviously, people don't do these things without assuming that the future value would go up. Vitalik seems to me that he has always been innovation-oriented, technical-oriented, software-oriented, practical use case-oriented, not so much on the money. And recent examples when somebody tried to do a promotional stunt by giving him a whole bunch of their coins, and he donated it to something, burned basically $1 billion worth of this token, or, maybe it was even more than that. I'm not really sure, but it was a big deal. And, I think we need to remember that we're still dealing with a very young guy. And for all the things that he has studied, he has essentially gone from being knee-deep in Bitcoin to creating Ethereum and being knee-deep in Ethereum. He hasn't spent much of his young adult life doing anything but considering how cryptocurrency works. So let's cut the guy a little bit of slack. He may not be right about everything, but there's also some things in a grand experiment that we have no clue how they're going to go. So here we are in the midst, watching it happen. So let's say in the case of the SEC and Ripple, which deals with XRP coin, in the past, it has come about where Ripple was the center of a lot of attention. And if I remember correctly, it was officially deemed a currency. And I'm not so sure that it should have been, when it's really, what I see the value of it is it's designed to work as a back end for currency. It's basically the thing that allows a barter to happen quickly without all the technical gibbledy-gobbledygook that slows down remittance from exchanging one form of money to another at, the instant value that transaction happens, and having to flow from, let's just assume, the central banks of one country to the central banks of another country. They have to agree on the amount, lock it in, figure out what the rates are, and then charge their fees and transfer the money. And eventually that works, usually. With XRP, it sounds to me like their whole deal is to make agreements with things, anything from MoneyGram to banks. The more multiple countries that they link up, you can basically use XRP as the transactional factor of a software business that handles better transacting in some form or another. So anyway, the issue way back when was classifying them as currency. And we always hear this thing that they say, we want regulatory clarity. It'll be good to have clarity. Regulation isn't all bad because we'll get clarity. Sorry, but it seems like the more often our regulators get involved, the more fog there is. The fear in the market happens more often because of something stupid that some politician or investment banker says. This is going to break. It's going to go to zero because stablecoins are horrible because, we need clarity. We need clarity. You guys have to learn something about something in order to provide clarity to it. Or once again, this is intentional to throw off markets or a socialist model that does not work. There's lots of different things. You can be incredibly smart and calculated in how stupid you come across. That's always one of those possibilities. Or you could be Chairman Mao and mess up the whole thing and lose a few million people in the process. Not the brightest chap when it came to agriculture. So you're welcome, CCP. I don't like you either. Regulation. We have a case filed from the SEC against Ripple this past year that now says that they're a security, and the case is dragging on, and they file motions and try to compel the other side to produce documents, and the other side doesn't want to, and then they've got until such and such to file a motion, and it just drags on and drags on and drags on. Meanwhile, XRP, like the rest of the market, tries to recover from the big knockdown that it had in price when they scared everybody that XRP wasn't going to be around, maybe, or they'd have to pay billions of dollars in fees and penalties. And so exchanges start delisting it and all this stuff happens. Nobody was worried about the definition or the regulatory clarity of XRP until the SEC came along and felt the need, whether it was to represent a very small handful of early investors who bought too high, saw the price go down, and sued Ripple with the expectation that it would go up. I mean, there's not really any other way to represent this. A lot of us, most of us, thought that real positive news directly correlated to the market value of a coin. This is going back to 2016, 2017, 2018. A lot of us were watching XRP and saying, wow, they're getting deals with MoneyGram. That's big. Or, I'm trying to remember this. Maybe I have it right, maybe I don't. But it was something like MoneyGram, Western Union type stuff. We heard deals are being made with Starbucks. Deals are being made with these different places. It's going to go like to $3, $4, $5, $10. XRP is going to be big. So we're all just kind of buying it at whatever price. And I mean, I say this, I'm spending like $20, $30. I had very little to put in the market at that time. But we all had this anticipatory expectation that news equaled value. And we have since learned that there's nothing more illogical than tracking the value of something in crypto. Things pump and dump all the time. That's just part of the nature of this. But also the volatility is a real thing that is not just manipulation of markets. It's the way that people really think and feel about something that never shuts down. The markets don't close on the weekends and they don't close after 5 or 6. So it's always going. So when people are up at some point in time in some time zone different from the rest of us, and some of them have been using software to analyze what Bitcoin's been doing, they might think that it's the right time to strike and start doing market buys and get a big chunk of crypto at what they see as a good lower price, at which point it perks up a lot of people's trading bots and they start doing the same thing. They either start selling or buying. So things can pick up anywhere at any time in crypto. It's not always volatility based on manipulation. But there's a lot of buy the rumor, sell the news in crypto as well. And, Elon, if anybody should be investigated, honestly, but he's the future of our green economy and will be leading the way as such, because we're going to move into the next thing that's probably even 10 times worse on the environment, which is digging for the things that go into batteries. But we'll find that out in 20 years when the IPCC's futuristic cousin, or, it'll probably still be them, put out a report about how evil that version of fascist communism is, subsidizing things through the government. So once they've, raped the land and done 10 times worse than combustibles, then we'll get the new version of the story on all that stuff. But I diverge. SEC makes an example of Ripple, and the price drops, and then it eventually starts coming up, and some of the exchanges start allowing XRP to trade again, and it does. And people are reporting daily on where that stands. But I look at the bigger example of this being Ethereum, because I think that Ethereum is a too big to fail scenario, because you have, when you get the check things off the list, you have Bitcoin, Ethereum, Litecoin, and strangely Bitcoin Cash, that banks and PayPal and investment firms are going to be able to either allow direct access to or access through funds, and maybe even exchange traded funds and things like Grayscale. Those are going to be the coins that are allowed. XRP, not always. Often not. It's not going to be everywhere until it either is or isn't. I think that Ethereum, being within the handpicked winners list, because there are thousands of ERC20 tokens built on top of Ethereum, and it would cause such devastation to so many different people's investments. Not that the regulatory agencies are necessarily actually looking after the common good of the investor. Maybe they are. A lot of times there's sweeping examples where an agency seems to be counterproductive, but there are good people within the agency trying to do good things, and maybe others have ulterior motives. But I think that Ethereum would cause a toppling of a house of cards that is not intended. I believe that the top coins are meant to get a pass, and that genuinely the regulators just want to grab as much of our money as possible. And it's perfectly fair to look at the history of cryptocurrency, and it was the lack of regulatory clarity that made a lot of people say, you know what, it's not even worth me trying to guess whether I'm going to do this the right way on my taxes. That was a very fair position. So then they make it very clear, do it like your cap gains. And you got all of your American exchanges already filing 1099s. No need to do anything more. It's not right to go into the software direction and start dealing with wallets and programmers that make wallets, which, by the way, you can take open source and compile your own wallet. And if it does the procedure correctly to go to and from the Bitcoin network and other coins network, it will work. It doesn't have to be MetaMask. You could make your own for yourself and it would work. So then, according to these new rules, you'd have to KYC yourself, supposedly. I don't think that they necessarily know what it is they're asking to do. They just want more money. They just want more revenue to make more bad decisions. So I think Ethereum is a too big to fail scenario. I think that there's too many of the investment bankers who really are the handshake that at this point protects us from the bad things that can happen to crypto, which is part of Michael Saylor's argument in favor of Bitcoin, saying that we already know the climate change crap is going to be what it is and going to happen. And we already know the category that they're putting our Bitcoin in. They treat it like something that you have earned on, just like your stocks. So, it's a capital gains category. And so you pay your tax in the same slot as any other capital gains that you would have. So these arguments about saying that it's good to know where you stand on those things, it's good to know whether we're moving towards better energy efficiency and renewables, so get off our back already. If you know that that's how it's going to be treated and that's going to be how it's going to be regulated, then you want to think in terms of those things getting set in stone and left alone so that they don't shift and cause adverse reactions to the industry. What you don't want is people who are either dumb or have ulterior motives to pull at the thread of things like stablecoins. And you might think that, okay, I'm a Bitcoin maxi, and I buy Bitcoin and I hold it. So I don't care what happens to Tether. I don't care what happens to USDC, all this stuff. The industry is going to move in the direction it moves with or without you. And if you choose not to care about the things that affect tens of billions of dollars of other people's money in crypto, then it's the same blinders that you have by thinking that Bitcoin maximalism means that none of the rest of the industry matters at all. So whether I think one thing is a better asset than another, they all affect each other. It's just like saying, I prefer Apple over Microsoft. I don't prefer either of them, but, people that are, Mac or PC, you prefer one over the other. Your denial about the other one, if you say, I like Apple, therefore PC doesn't exist, you're the one that's wrong. They both exist, and they both actually strengthen what their markets are based on how much people are basically polar against the other one. So, PC is better largely because of the Apple people that hate it so much, and vice versa. Same thing happens between ETH and BTC. And the thing is that I personally see more people online talking about all the flight by night, pump and dump scam coins 10 times more than I see them talking about Ethereum. So Ethereum to this day still, despite all the diehard people that believe in it as the world supercomputer token and all these different things, who are hopeful about proof of stake, all these different things, I think that their main interest in Ethereum still is, will it pump? And I think part of that is a question mark to what is the supply going to be? If you are always going to have plenty of Ethereum around, then it's always going to be about, is there enough economic traction to actually make the price go up? Or is there simply too much money in it already to make the, I think once we get above 4,000 or 5,000, I don't know how much the actual buying power exists for Ethereum to keep going up and up and up. With Bitcoin, it's a matter of time that I think that it's roughly 4 million of the coins. When they are in wallets and not going anywhere, I think we will see extremes that even go beyond what people have been projecting. Personally, I think that that's the case. So bringing all those elements together, you look at the value of these coins and what they're bringing to the table and what the regulators have been looking at. Thinking just in terms of the SEC, I have heard things from Gary Gensler talking about the kinds of projects that they are focusing on, that they are centering in on. And, take that to mean, who are they going after? And from what I understand, although we don't really hear these things being reported, they've been going after dozens and dozens of projects. And I don't think that it's a really complicated area to understand what they would be doing. And I strongly encourage you to go to YouTube and find the free MIT courses online and take the entire Gary Gensler class. It'll bother you because he's seems like a fairly friendly, smart guy and a neat person to learn from. But it lets you know that he is intrigued by the technology, but thinks that regulation is going to change it a great deal and rein in the craziness, and that he is very skeptical that a lot of these coins are going to be able to perform the utilities that they are designed to perform, and that they will have the freedoms that the designers expect them to have. Okay, that's the SEC right now. That's the main mentality of the SEC. The question is, I think, unless I have this wrong, that it comes down to ICOs, IEOs. Initial coin offerings, initial exchange offerings, which the initial exchange offerings are meant to take a safer regulatory approach when launching. And they may technically only be happening because of the stigma that was attached to ICOs. So predominantly speaking, what happened? What happened was Ethereum came along, made it very easy for other people to launch their own coins without as much technical knowledge, although there are a lot of extremely knowledgeable tech companies launching ERC-20s. But you could launch tokens on the Ethereum protocol, and it's very quick and easy compared to having to do one from scratch. So you start having these hundreds of different tokens coming out with kind of the same website and a really sad looking YouTube video and promising that they're going to do some valuable thing. And they raise money in an initial coin offering, and then they get listed and they pump like crazy. And the owners of the coin or the creators sell at a massive profit. And then the coins tank. And then people wonder, okay, is it a real technology? Is it not? What do we actually know about these folks? Et cetera, et cetera, et cetera. When it comes down to it, a lot of the ICOs were not necessarily scams. They were just some people that were really excited about the fact that they could launch a coin very easily and raise a ton of money very quickly. And they didn't really care whether they actually ever got any utility out of it. It was just a really exciting way to raise some money and pump. And then, they didn't break the law in their minds, but they didn't necessarily really have to succeed in bringing any kind of great technology through. Literally, coins with websites that just kind of define cryptocurrency and decentralized money and the future of technology, blah, blah, blah. And here's how this coin is going to do the same thing. Well, every ERC20 succeeds at doing that thing. It's just that the only utility that people use them for is to invest in it, watch the price pump, and sell at the top. So this happened over and over and over again. And some of those were actual scams. People promising something that a coin could do or would do that was very important sounding, and lots of hype, lots of shill news, lots of pump groups, and then they'll do a complete rug pull and take off with everybody's money. All the money from such and such coin is gone. We don't know what happened. We're telling the authorities. Boating accident, lost our keys, whatever. So ICOs start getting a bad reputation. Lawsuits are filed. Cases are brought up against, etc. So IEO's initial exchange offerings, that, we have things like the Binance Launchpad incubating different projects and kind of getting behind projects they think have value and stuff. But really, Binance has become, even though it is still the biggest, it's the heartbeat of the exchange world in crypto. They have certainly fallen from their high place of, exchange the world, exchange the future. Have not been impressed with CZ the past 2 years at all. And the people that they've been trying to keep in position at Binance US just shows what a train wreck it is. I would imagine other countries are having similar experiences, and CC is now even talking publicly about finding his successor. So things will be interesting there. What's going to happen to the volume when Binance is not king anymore? They are in the bullseye of a lot of different cases. They are under investigation in multiple countries. Have they actually done wrong things by being too lax on their KYC? I don't really know. Places weren't extremely clear about what you do when you're set up in multiple countries around the world that have the most lax scenarios. Malta, Seychelles, Singapore, other places. I come back to regulation, and I'm going to use the SEC specifically in this scenario. The incubation of projects on exchanges reduced some of the stigma of ICOs, but were they really any different, really any better? What I see is the severity of pumps in a world post-Cryptopia that used to be nothing but pump coins. Things would go up 200, 300% and then just die. And they'd have, 700 different coins listed, all of them sitting at zero, ridiculousness. But that's kind of the bloated thing that we have in Binance now. New coins are getting listed constantly, and I've seen, 1,000% on a coin, maybe more than that. It's bizarre that coins can pump to this degree. There's that much more volume and circulation happening in crypto. And I don't see the good or the bad in more heavily regulating these things. People are taking risks with coins that mean nothing. They come and they go. And those are the decisions that people are making. Should they be making it? I don't know. Should people gamble? Do you want to ban Las Vegas? A lot of people would like to. But, that's why they have Gamblers Anonymous. If you got a problem, then you need to deal with your problem. Don't tell me that I'm not allowed to go somewhere or do something because you've got a problem with it. So in that sense, now we're talking philosophy over Now we're talking philosophy over politics. What is the ideal? What is the ideology behind things? In crypto, most people believe, leave me alone, we'll work stuff out. If something really bad happens, we'll contact the authorities. All the rules that need to be there are already in place. Yes, they are. Just today, Poly announced that they got hacked for, the equivalent of $600 million, I think. These things happen. They will happen. They don't happen every day. They don't happen all the time. It might happen once a month, maybe once every 2 months, maybe once every 3 months. Some big thing like that happens. Never does a day go by that people somewhere don't scream, get all of your money off of exchanges. Okay, the infrastructure thing has come and gone, and most people's money are still on exchanges. You can't trade if your money's not there. And you pay anywhere from a couple of bucks to $20, $30, $40, $50 every time you want to move your money off of there. So where's the incentive to trade, make, 10, 20 bucks and then lose your profit to take it off of there? People have to be strategic in every single thing that they do. There's always a warning about getting into this project, getting into that project. 9 times out of 10, the worst thing that happens is the value goes down. And oh boy, has the value of most things gone down. Most of the time, most everything other than Bitcoin, Ethereum, and Litecoin is on a downward trajectory. Most of the time. Look at a chart, tell me I'm wrong. So should the SEC go after Ethereum? I mean, if you want to take unless I have my facts wrong, I believe that they raised money and they did so in a fashion that they should have in the US registered as a security. But it doesn't benefit anybody to go after them to say you have to register or pay fines or do anything. It doesn't help Ethereum. It doesn't help the government. And it certainly doesn't help the thousands of ERC20 tokens to target a token in that manner. Maybe they get some revenue out of that, but they're going to get a whole lot more if the governments suddenly were to encourage the budding new industry and to encourage the growth and encourage new businesses. The businesses pay taxes. You're going to get your stinking money that you didn't do anything to earn, Mr. Government. So the ideology here is that we want to be left alone to do our own thing unless something really bad happens, in which case then we assess what kind of bad happening was that. And, if you look at the libertarian mindset of this, which I am not a libertarian, but I embrace the reason for the most logical ideals within libertarianism, which would be that, don't regulate me until there's a problem. So, if you look at traffic rules and stuff, we're required to wear our seatbelt and not be holding a smartphone because people have died worse or gotten injured worse or harmed other people worse from not doing the proper behavior with those things. So a libertarian mindset might be, don't tell me what to do with my seatbelt. I'll take my own risks. And if I go flying out of the car and die from a wreck that I could have just gotten injured in, then that's on me. That's not your problem. They might say the same thing about the smartphone thing. Learn your own way to deal with it and be responsible, and it's none of your business. Well, that's where I disagree on some things. I think that a little bit of the right clarification on things is just being a grown-up. The problem is that those in power grow in power. Those that make the rules make more rules. Regulators like to regulate things more. And anywhere that there's tax revenue, there's winning cases where there are penalties and payments on things, recovering assets from people that they think that they're entitled to a portion of. We have gone so far beyond rules that are there to regulate right and wrong in fairness contracts, social contracts with one another. We've gone so far beyond that even the most extreme to the conservative and extreme to the progressive sides aren't even on the same radar with how far beyond most countries have already gone. When you have super hyperinflation and people are paying 50% in taxes on everything, it's ridiculousness. Compulsory everything. I'm sorry, but the 2020 was the litmus test for how countries do, and the most freedom-minded political spheres came out better economically, recovery-wise, and in health, across the board. If your statistics say otherwise, I'm sorry, but they are politically motivated. Mine are not. So the philosophy that is at war with the politics, and I use, once again, SEC and Ethereum as the example, what we're seeing in reality is the idea that there are a lot of coins built on top of Ethereum that should have registered as securities if they wanted to get money from their ICOs when they launched in the US. So the other choice is don't do any funding rounds in the US. Don't try to raise money. Don't try to sell coins prior to a public launch in the US. Only do it in countries that either you think you can get away with it, or you think that the country's governments are so corrupt that they'll never actually organize themselves to file a suit against somebody, which is very likely. So I think that it makes sense to have a requirement in place. And the thing is about those who are crying for more regulation. They want to regulate writing software. They want to regulate KYC for people who have already programmed software. Just left, right, up and down, everywhere you turn, there's a stranglehold to have more money for something that is money that comes from us. The source of the money is if we bought something and we sold it. If we sold it at a loss, then we get to deduct it up to a certain point. If we sold it for a profit, they want some of that. We get the concept. What you're trying to do is to program the inability for somebody to choose to try to hide that from the government. And one could easily say that there's so much desperation in the market from so many different countries, the people of so many different countries, that hiding some of their value may be the only way that they will ever not be dirt poor. And if the purpose of the government, for example, we look at the way that interest rates and quantitative easing and inflation, all these different things are handled. Part of the whole purpose of that is to basically guarantee opportunity. It's there to help balance that there are jobs and to encourage job creation and to prevent the flow of money from having a negative impact on people affording what they're supposed to do with that money. That, in my opinion, is already too much control. But that's what the dynamics of economics are supposed to be doing for people. And instead, these agencies are weaponized to try to figure out how many ways they can take something back from people. Just because you're calling it whatever their tax bracket is of capital gains, and that becomes the law, the principle of the law is no longer philosophically designed for the people that it is there for. Now, there's issues with legislation, the passing of bills and laws and amendments and things, and then regulation, where regulatory agencies are really supposed to be there for the protection of people that use things or do things. They're supposed to provide a filter so that the transactional nature of something filters out the bad to some degree so that it allows the purpose of that thing to flourish. When I talk about the weaponization of regulatory agencies, we have FinCEN, we have FATF, we have the SEC, we have the FSOC committee. We have all these different things that are out there that one by one, we see them going after the need for control, for data, for controlling the flow of information, controlling the flow of value. And we live in a time where when everything is being digitized, value is conditional upon the speed of information. And so you could really, as we're redefining the definition of currency, which is going to be the next episode's topic, as you're looking at the future of money, the future of currency, we are redefining what money means. We're already calling things new stuff that is significant. The freemium is one economic principle that is a little bit different from traditional stuff because it's digitized. The nature of offering services of things are evolving into new things. The idea of a gig economy, where you don't, go and interview for jobs and then you figure out whether you're on an hourly or salary, whatever, to where everybody is kind of pimping for a gig, trying to get a commission off of selling something or, selling products, but those products may be their intellectual property, their art, writing a paper, doing different things, selling their albums. At the same time, cryptocurrency is tokenizing a gig economy, tokenizing things that they may have tried to do in different forms. And it's evolving into new things where I think that everything that has been a service before, oftentimes a freemium economy, may be kind of merging and melting into this new gig economy where things that have been free, like even Zoom conferencing and Gmail and different services that rely on a free entry level cloud data and all these types of things, may very well start to go into fractional types of payments and very small hundreds of thousands of microtransactions taking place on the next web. And it is a new form of money. Fractions of intellectual property passing back and forth where one person is profiting or losing amounts of value over another is really a new design for economics. And we have the old world agencies trying to grab at these groups doing, in stocks, it would be an IPO, in coins, in cryptocurrency, it's an ICO. And so we have, the two mirroring each other. One of them is a brand new thing altogether, but you have all these tech startups that are in the field that they go through the funding process like traditional businesses have. But the technology that they're going to be using may be something that is groundbreaking, is completely new. So I think that it's fair to look at this like, do you want to be too heavy-handed with the next internet? Or we may never find out what that next internet could have done for humanity. And some would say maybe it would have been great if they didn't allow the internet to become what it has. But we certainly all rely on its use. So I think the moral of our story here with Crypto Gordon Freeman, like, subscribe, comment, share, ring the bell. The moral of our story here, I think, is that agencies are supposed to be there to serve the people that they either protect or assist. And the taxation has a very small place in society, but it should function on the basis of the things that it functions upon. It should not be a ruse to bring in more money for things. You can say we need money for roads and bridges. Okay. Did the people stand up and say, hey, government, we need money for roads and bridges? If that's the case, that's the order of the process that it should happen, at least in the country that I'm in. If that happens, then, your local towns and communities can say, what would it cost to do this? What would it cost to do that? And you create budgets around those things. What we have is a heavy-handed top-down system that says, if we strangle this element of this new technology over here, we could grab $28 billion in tax revenue. Okay, that's very different. Oh, we'll throw it in with the roads and bridges. That is entirely different. And also, a 1.2 or whatever it is, $1 trillion roads and bridges package is showing the signs of hyperinflation. The word trillion should never come up in budgeting. $100 million should seem outrageous to us still, but it doesn't. They don't. Back from 2008 on through the Obama administration, handling, basically preventing one crisis to the next. The prior administration had done a $300 billion recovery, and then Obama did $400 billion, and then I think it was another one that was even bigger than that. And those numbers were astronomical, never before seen or heard. We have printed half of the money supply since 2020, if I understand that correctly. We have outperformed the spending in every version of this. And yet they want to use those agencies to tell us how little we should be able to do with our own money. That doesn't sound right to me. We are a brilliant, self-governing community, except for all the idiots in it. There are some scammers. There are some bad hackers. You would say black hat as opposed to white hat hackers. There are smart investors, and there are really, really, really dumb investors. There are people that come into crypto thinking that their dog is going to go from 20th of a penny to $1 overnight because comedy. And when it does the opposite of what they bought it to do, some of them go crazy nuts because they're begging for people who travel to Mars to tell their coin what to do, and it doesn't work. That's just bad investing. And there's going to be a whole lot more of it because this is a vastly undereducated crowd that is coming into their investing years. So there's going to be some really stupid decisions, and you can't regulate dumb. So I don't know how you help that one. But as the years go by, it doesn't ever seem that society spends less at the government level, that our government spend less, that they ask for less, that they want more freedom for their citizens, that all these government programs are designed to just be more and more and more helpful. There's always somebody making out with the bucks, and it's never us little guys doing it. So the sooner that you recognize that, instead of buying into the dialogue from whichever side you have chosen, the sooner that you might have scruples too. That's my hope, is to encourage more people to have scruples and get into these conversations. What thus far has the SEC done that its clarity has brought better things to the crypto community? I leave you with that question. This has been Crypto Gordon Freeman and the Club 21M podcast. And for now, Crypto Gordon Freeman out.